Hello, welcome to the October Wealth Advisory Top 10 Extravaganza. Again, I say extravaganza. I know. I think we should make that part of the actual title. In any
Only
event,
if I'm allowed to say every month that I can't believe it's the next month already.
You can, I know. I'm going to have to update you, though. Like, hey, it's the last month of September. Oh, we're coming into October, Jason, so you're not so surprised by it.
Thank you. I appreciate that.
In any event, this is the Wealth Advisory's sort of trading aspect, right? We pick the 10 stocks that we think are going to do best from our portfolio over the next month. We have a lot of subscribers, and new people come on often, and they're often wondering which of the 32 stocks in the model portfolio they should buy. And it's reasonable. Nobody's going to just buy some of each. You have to pick.
All
You have to
30
pick and
stocks,
choose,
that's
right?
tough. Especially when you're just starting. So we're bullish on all of the stocks in the portfolio.
Absolutely.
We like all of the stocks in the portfolio. So this is sort of our way of saying, which stocks we like the most in the short term.
Very true, and they're all thoroughly vetted too, and we review them frequently so that we know they're still good for our portfolio and appropriate for your investment dollars. This last month, I think I won, but it's not a very. It's not a very
did win.
Nothing to write home about because
Right.
we did not do very well. We're all down. We didn't 10 stocks. Not one of them posted a gain. We had some, at the end of last week, but the
If
market's
this were a
kind of
reality TV show, I could have won as the biggest loser.
Yeah.
Chewy really hit me hard. I didn't expect them to sell off quite so hard after earnings.
Chewy is a surprise.
That's obviously it surprised the whole market. That's why it's down,
Right.
25%.
And apparently, I didn't realize. In another sort of a competing newsletter, the Motley Fool is very big on Chewy. I didn't realize they were so big. They're like coming out of the woodwork to say what a great value it is and how
They are, and I'll be completely honest, Chewy had already taken the hit before we sent out the video for last month, and in my little blurb commentary, I said, after that hit, I like it even more. Chewy should be at $90 where we entered at the beginning of this month.
And it will be.
And it will be
in the
again.
future. We still think it's a great place for investors' money, and
definitely.
obviously it's a very popular stock among individual investors,
It
which
is.
That can sometimes be an issue. Individual investors will be a little more flighty sometimes than institutionals. They're not going to hold through bad times. If they get nervous, they'll sell. It happens all the time, and we hear from subscribers that are the same way.
Institutions quite often just won't sell because they can't. They own so much.
Right.
If they sell, it affects the price.
Right, it affects their own holdings. Right, exactly.
Exactly.
And they don't have to worry. They're not having their investors pull money all the time. They don't have needs they might have to fund. Like if
Short term for an institution is a
Exactly.
lot longer than short term for a person,
Exactly.
an individual. But yeah, it was a rough month. It was a rough month for the markets too. It was definitely.
Well, it seems
Saw a sell-off in September. A couple of people have been talking about it. One of our fellow analysts here at Angel Publishing, the parent company of the Wealth Advisory, had been predicting it for a couple of weeks, and I think he helped protect our readers pretty well there.
Well, yeah, I've been looking for it personally. I said last month.
Yeah,
I thought
you've
we
been
still had
talking about
weakness
it for
coming.
sure.
But we also had a crazy rally after that Evergrande news hit. We had that like almost 1,000-point down day on the Dow, and then the rest of that week was just like crazy upside. 2 weeks ago, it really was.
It really was, yeah.
And the indices are still close to all-time highs. But again, it's that breadth issue that we talked about last month and probably for a couple months running, where you have the really big, the mega cap techs doing the heavy lifting for the indexes, and a lot of the rest of the companies basically
really the majority of
aren't
the
doing
companies
as well.
in the index.
Aren't doing as well, and so and that's definitely a scenario where we just don't have as much activity from individual investors. I think a lot of people are standing aside and not taking new positions because. You have the inflation stuff going on. You have now we have the China stuff going on. We know rates are going to.
Worried about investing in market tops too.
Yeah.
Everybody's heard a scary story about that.
Right.
I will say, pretty much everybody who's invested in a market top up to this point is looking at a profit now. So
Yeah. So it's a funny thing because you let your winners run, you buy strength, but also when you get to certain levels, people start to get a little more nervous about it. They don't want to put new money to work. Just hang in there. So let's go through, and the format of this is that we do a little fantasy draft with our top 10. I pick 5, he picks 5, and then we see who can win for that month.
Each
see
month,
who has the best picks.
each month we get the option to keep 3 of our previous picks from the last month, but we have to replace at least 2 of them. I mean, honestly, after last month, I probably just want to
Well,
go off the mountain and start
you
over.
say that, but
Right? No, I
I did have another. While I might have won the competition for September, Jason, you have won another competition.
What's that?
As of the last few days, the greatest stock pick in wealth advisory history.
Oh, really?
It has been me. So we work as a team on the wealth advisory investment newsletter, and we each will bring stocks to each other and say, "What do you think about this for the next month?" And then we kind of debate it and see who ends up with that month's feature recommendation. We don't make a big deal about that because we are a team. But for the longest time, I've had the best stock pick in wealth advisory history being Twilio, which has been consistently over a
really good
1,000% gainer. But you took over. Twilio's now just under 1,000%, and you've got innovative industrial properties
IPR.
at a fair amount over 1,000%. I think maybe even 1,100%.
We love that
Well,
stock.
yes, we definitely
I love
do.
that stock at $20. I loved it at $125. I still
Right.
love it. It's almost at $150.
Well, the dividend. It's like again, it's a REIT, right? So that's their whole MO is they expand their revenue and their dividend goes along with it.
I think it's a great
gets
example of what
changed.
happens when you invest in a company right before they start growing their dividend.
Right,
We talk
exactly,
about the power
exactly,
of growing dividends and compounding dividends
Right.
and like growth over time. And IIPR is a perfect example of
Right.
that. When we bought it, they were paying 60 cents a year. Now they're paying what, $1.60 a quarter?
A quarter, I think. Yeah.
So that's incredible. That's the power of
Right.
dividend growth, and that's definitely
Right.
what's I want to
Right.
give most credit to the dividends for that.
And if you're
incredible
reinvesting
gain.
that dividend all along, you're getting more shares of dividend.
Yep.
Your actual take is getting bigger. So we always pay attention to new REITs that come to market. There really haven't been anything exciting in that space in quite a while, because when you do catch them real early in their life. You can just make phenomenal amounts of money.
Especially when you can catch
It's
one like
amazing.
this. Innovative industrial
Right.
was, it's a niche. It's very niche. It was literally the only type of operation like that in existence. And I think we're gonna start to see some more REITs in the green energy and the renewable space.
Sure. Yeah.
We've already added Hannon Armstrong to the fold. They make their money basically by financing green energy projects.
Right.
Excuse me. But I think that we're going to see some more of that,
Right.
And we're definitely keeping our eyes out for that because I think
Yeah.
those could be, kind of the next IPRs.
Well, and every investment bank, every sovereign wealth funds, they're all looking to have a big portion of their money invested into green energies. I mean, these green bonds, it's everywhere. So that should be something that we see coming. We definitely should see more opportunities for that. All right, well, let's move on to what our keepers are going to be.
For the month. And since I am
you
the
go
biggest
last.
loser,
I declare first.
Huh? What's
Don't I
that? No,
declare?
you won this month.
Oh,
You're just used to going first.
Good one.
Sorry, I couldn't
That's
resist.
okay. I deserve it. I can't say anything.
Nope, I am the biggest loser this month, so I get to name my keepers first, and I'm kind of, I said I wanted to toss them all, but I don't want to toss them all. I'll be completely honest. After a drop like 25%, I can't drop Chewy. I gotta keep Chewy in there. Chewy's like my number one.
I'll take it if you don't. I mean, I'll add it to mine if you don't want it.
Because there's no reason for it to sell off that much. It missed earnings a little bit, but they're still projecting growth. I mean, they talked about supply chain constrictions, but who hasn't talked about supply chain constrictions?
It's across the board. Nike's getting hit by that. They got it pretty good, right?
And even the people that aren't getting hit by it are talking about it.
Right.
So I mean, I really think that Chewy, I really think Chewy should be a $90 stock, and I think it could be an $80 stock by the end of the month.
Definitely. And when it turns the corner, it's going to roll. I mean, you know that's going to happen.
Definitely.
You know it's going to happen.
Definitely. It's just tough to tell when it will because, like Britt said, there's a lot of individual investors in there, a lot of retail investors in there, and we move our money quickly or quicker than institutions.
Yeah. And individual investors also tend to put everything they're going to put in a stock all at once. Like getting people, getting the people to strategize and dollar cost average.
Leave some money on the sideline.
Right. To take advantage of the opportunity. It's hard to because when you think you have a winner, you're like, I've got a winner.
I better buy it all now.
Right, exactly.
Yep.
And institutions have money coming in all the time too.
Very true.
Whatever if they have 401k sponsorship or whatever it might be.
Very true.
So they can. It's a lot easier for them to buy
Dividends that they
incrementally.
decided to reinvest in a different
Right,
company.
right.
Things like that.
So anyway.
Chewy's definitely sticking around. Innovative Industrial, I'm going to keep them. I really like them. They have always done well for me. This month they were my, best performer. Put best in quotation marks. I mean, they were the best performer, but it just, it doesn't look great. So I really like them. Really like Innovative Industrial. I've loved them since we recommended them. I love the dividend growth. They just added another new property, expanded a new partnership in, I believe it's New York. Mm-hmm. When we first invested in the company, I think they had less than 10 properties, and they've got, we're getting close to 100 now.
Wow, that's amazing. That's really
fully
good.
leased.
Really
Whenever
good.
they buy a property, it's 100% leased already.
Right.
So basically, every time you see them buy a property, you can pretty much assume that you're going to get an announcement that your dividend's getting
It's
raised.
Cresco. Cresco
soon.
Labs is one of their big
Cresco's
tenants,
I think their biggest customer.
which is a medical marijuana company. That's also big in Europe, right?
All of their properties are medical. All of their properties are medical
okay.
cannabis.
All
They
right.
don't mess with recreational cannabis at all. They decided that they wanted to stay on the medical side, that was their.
It seems
that was their niche,
conservative.
that was their focus.
Right, it seems conservative,
Exactly.
but that's where the most stable companies are.
Yep.
So,
Yep.
that's where they are, which is, absolutely the right call.
Yeah, no, I definitely agree. And so let's see, we've got Chewy, Innovative Industrial, and I think I'm gonna keep Greenbox. Greenbox looked like it had some like it wanted to do something earlier. It's been moving up a little bit this week. It had just it was down with the markets before. So
Agreed.
I think that's what I'm gonna do here.
Their last earnings were really good too.
So good.
Really
That earnings
good.
call was really exciting.
It was, and they're just not getting play from whoever it might be, the analyst or the financial media.
Yeah, I think it's
Just
attention, and I think
unrecognized.
it's one of those things where when the attention shifts to this company, it
Right.
goes crazy.
Right. Right. And and the markets in general are still so focused on the cryptocurrency aspect of the blockchain technology, and they're still not looking at it as where financial transactions being resolved are going to be
I mean, and that's
within
the
a few
value
years.
of the blockchain.
Right,
That is
right,
the value.
right.
The cryptocurrency's nice, like it's kind of cool,
Right.
it's fun. I can see the utility, of it in the future.
Right.
But the blockchain, I mean, that's where it is.
Yeah,
Like, that's where it's at.
and the thing is that all your big financial institutions have a vested interest
Yeah.
in this transition to blockchain. So
Definitely.
in a way, it's not surprising that you're not hearing a lot about it because
That
these
way
bigger
they can
companies
load
aren't
up
going
first.
to. Well, yeah, and
get
make
their
their
people in.
transitions first.
Very true.
So it's definitely reasonable, and it's
Very true. Usually the banks tell you to buy until they're done selling.
right. I know it's
so-
always right. It's always buy low, sell high, right? So they're not going to tell you to buy low. They're not going to do that because that's what
They prefer that you buy high and sell low.
exactly.
They do.
Exactly.
So okay, those are going to be
All right.
my keepers. I said I was going to throw everything out, but I'm obviously a liar.
Right.
Just in that case.
I find you right
Okay.
all the time.
I don't
Just
lie
kidding.
all the time.
I know.
I'm
just kidding.
brutally honest. I'm dangerously honest.
Uh-oh. Tell me what you really think.
Gets me in
Gus.
trouble sometimes.
Tell me what you really
Because
think.
I really do.
All right. Well, I'm gonna keep I'm gonna keep you from digging your hole any deeper. First of all,
Thank you. I appreciate that. See,
and I want to move
good
on
partner.
to my keepers. I'm definitely keeping Qualcomm. Their last it's so funny. Their last earnings was fantastic. It was a beat and raise scenario, right? They beat estimates and then raised their guidance for the rest of the year and next year. You look around and analyst price targets are pretty much 180, 200, 210 maybe. And here the company sits at 130, and actually are down from that earnings report. I mean, one was like, you don't see a beat and guide higher, like sell off like that very often.
Yep.
And so, frankly, Qualcomm's been waffling around that $130, $140 mark it's been quite a while. It's going to move higher. It's kind of like, again, can I say it's going to do it in the next 30 days? I mean, that's a tougher call.
right?
It's a tougher call.
I mean,
but
if we could make that call 100% accurately all the time,
right.
we'd all be billionaires, and so would
We all would be, right. We'd still be on TV because we're vain and we like to see ourselves.
We like to hear ourselves talk.
But, Qualcomm, and this is one that, again, we do this for our subscribers to know where, we think are the best places for their money right now.
Right.
And so, in a way, if Qualcomm doesn't move higher in the next 30 days, I kind of don't care because I know that, money is very safe there and it's going to appreciate at some point. So
No, definitely. And I've done that before too. IIPR's had a sell-off, and I've said I don't expect it to recover that much this month, but at this price, I really want everybody to add it, and I'm so adamant that I will give up a spot
Right.
You know, in the top 10 for
And
that.
we can make 10, 20% maybe over the next month. But ultimately, when you're looking at triple digits over the next couple of years, I mean that's what's important about where you put your money.
Yep.
Not so much what happens to it straight away. So in any event, and I'm also going to keep Invitae because I think that one has sold off way too much.
Oh, definitely.
Yeah, and it's too good of a company. It's too like ahead of the game.
It's just got so much underlying value in that data that it's collected so far.
Oh my gosh.
You know?
Yes.
And I don't think anybody's really paying attention to that. I think they're just looking at like how many tests can these guys sell.
Right.
It doesn't
Right,
matter.
right,
Well, I mean, I guess it does matter because the more tests they sell, the more data they collect.
Right.
But it's how much of that data, like how can they use that data to make money? And they're going to.
But it's and it's going to be the potentials for that kind of the genetic tags and various
partnerships
diseases.
with medical researchers,
That's
partnerships
what you
with
need to know.
universities. You know, that's definitely going to be I think
You
that's
can
going to
have
be a big thing.
You can have melanoma cancer, right? And it's one of the most aggressive cancers there is. If you
That's
have
the kind of thing. If a family member gets it, you got to get tested.
right, well, and if you have a certain genetic tag, there's a drug that is unbelievably effective on it. If you don't have that genetic tag, on the of the variety of melanoma you have, then they can't do anything for you. And so as we learn more about the various genetic makeups of the cancers, they become easily treatable. And that's something that a company like Invitae is going to be able to help with because they're going to have all these markers
and they're
mapped
help
out.
people be able to identify that stuff
Exactly.
Earlier,
And have drugs
earlier in
targeted
life
for it.
to
Exactly right.
to where you can address
Exactly
it
right.
before it's a problem.
Right. And so that's going to be going to be a valuable thing. And then this is where it gets tough because I like all three of my other ones, Unity, Hannon Armstrong, and Jumia. But what am I going to do? I think I'm going to keep Hannon Armstrong because I think that there could still be some weakness ahead. Granted, Hannon Armstrong is down a little bit now, but it was up. I had like 11% as of sometime last week
It
for
was
the month,
good.
and
And
it
Invitae
turned.
also, both of them,
Yeah.
turned like towards the end of the
Yeah.
month. I mean,
Sad.
markets were kind of rough,
Sad, very unfair.
sad and unfair, very.
But that's what I'm going to do. I'm going to keep Qualcomm as a little bit more aggressive play, and Invitae is absolutely an aggressive play, and then Hannon Armstrong as a kind of conservative play.
I like that.
Yeah, we've been seeing some. It's interesting as oil has been really rocketing higher, right? Brent broke what $90 today or 80. Anyway, I think it's 80.
WTI following
like,
suit over above like 76 or something.
Right, exactly, exactly.
We've had analysts here, and I've even said a couple of times that $100 oil is not out of the question. $120 oil isn't either.
It's probably inevitable. I mean, it's
especially
probably inevitable.
as you have more and more companies. Or fewer and fewer companies exploring,
Right.
Going out there
Yeah.
and exploring for new stuff. Like then, really like what we're left with is deep sea oil, which is
the incentive
really
to bring
expensive.
the incentive to bring new supply to the market is definitely lower than it was, which will raise the price. But
That's
when you
actually
get
something just on a side note that we're seeing in the natural gas market right
Mhm.
now
Oh
is
my
people are
gosh.
like, why aren't U.S. natural gas producers coming to the rescue and selling natural gas? Well, it's because that's what happened last time.
Right.
Is that they expanded their operations
right.
so much that they tanked the price of natural
Yeah.
gas and nobody made any money off of it, and everybody invested billions and got nothing to show
Right,
for it.
right.
So they're really happy that natural
Right.
gas costs this much now.
And we'll see as when fossil fuels rise, the alternative energy stocks the renewables tend to go along with it because they become a more attractive option, right?
Yep.
When prices are really high for
definitely.
fossil fuels. So Hannon Armstrong could tap into that a little bit. So I'm going to stick with that one.
I like it. There's also, a lot of talk of, everybody's talking about the debt ceiling, and the Republicans have sort of said, we're not going to help. You haven't negotiated with us, so we're not going to negotiate with you. If you're going to shove stuff down our throats, shove the debt ceiling down it too.
Yeah.
So, looking maybe more and more like that $3.5 trillion bill actually does happen, just on party lines. And Hannon Armstrong would be a big beneficiary of that.
Definitely would be. And another sort of aside to that. Is the scenario that's going on in China? Because while the renewables have some catalysts from potential law changes here, the situation in China, the Evergrande getting all over leveraged and at a tipping point. I don't think we have some kind of crisis coming from that. But what I do think is the inevitable outcome is that some of your material stocks, copper, for instance, are going to have. There's going to be less demand for them because building is slowing in China. I mean, that's the deal that's going on with
But
Evergrande.
I was just reading an article the other day about you mentioned copper, so just using copper
yeah.
as that example.
Right.
But one of the world's largest copper mines had to shut down because of protests.
Sure, yeah.
You know,
Is that one of Freeport McMoran's the one in?
No,
it's
it
not.
is not one of Freeport
Oh,
McMoran's.
okay. I thought
it
they
really
had
made
the
me want to
biggest
go
one.
pick up some more shares of that. We had
Yeah.
Freeport McMoran in the portfolio. We got rid of it at the end of last year. Got it like a 65-70% gain
Yeah, it was good.
in just
It was
a couple
nice.
of months.
Yeah.
Definitely still a good company if anybody's
Absolutely.
looking for exposure to
Absolutely.
copper.
And they've got oil too. They have a lot of oil. So that's a
Yes,
good
they
one.
are well diversified. They
Yeah.
don't just make copper.
But I think and coal, like not meth coal for steel as much, but coal could be taking a hit. I've been hearing a lot of kind of like concerns about Australia's economy because they're so heavily tied to natural resources to China.
Right.
And
I mean, if China slows down, China runs on coal.
Right.
You know,
They do.
China runs on coal.
And they
will for
are
the next
slowing.
like 30
They
or
are
40
slowing.
years. But they're slowing down. Their economy's slowing
They've
down.
missed their GDP targets. Everybody's lowering them right now. World Bank, IMF, and all that.
Surprising.
Well, it is, but it's inevitable because I wrote last week like
it's being treated as surprising.
Well,
but
right.
It's inevitable.
Inevitably you build all you need to build. I mean, it does happen where you've brought your infrastructure and everything else up to where it needs to be, and then what? You can't keep building. And that's what their economy is completely built on. Is the building, and so it's going to be an interesting transition. And so we're not making any real moves about that, but it's definitely something to kind of keep in mind.
No, definitely. Definitely is. The only moves that we're making is continuing to stay away from Chinese stocks.
Yeah, that's right.
Really.
That's right. Yeah, we've avoided that, and we're going to continue to because where President Xi's clamp down on the economy and ends. I mean, who can say? And so the tails of this. I mean, I totally think many of the Chinese stocks that are trading on the U.S. markets right now are going to end up delisted and then relisted in Hong Kong. I think that's inevitable.
Yeah.
I do not think that. The China government wants U.S. money, basically. I don't think they want to have any kind of
Well, I think they'll take
ties.
the money, but they don't want to have to follow the rules.
But they don't think it's important, right? They don't want to follow the rules. That's a better way to put it.
Yeah.
That's a better way to put it. So anyway, let's get back to the top 10. As the loser, Jason, you get to pick your new ones first. And we're gonna you get to pick first. So
Do kids still do that?
no, that's why I do it. My kids see me do something and they stop doing it immediately. They're like, oh my God, that's definitely not cool anymore.
Dad. We actually saw somebody walking through the airport the other day dressed in something that my fiance wouldn't want to see her future daughter wearing. And she was like, oh, what are we going to do if our daughter does that? And I was like, babe, I will tell her that I think she looks beautiful, and you will buy the exact same outfit and wear it with her.
That's really good. Good luck actually doing that. Like, your head's going to explode. You're never going to be able to keep your cool. And I asked my kids.
Try.
I asked my kids.
So
they were
hard.
both around this weekend. My daughter was heading back to Tulane. She's a senior. She's going to graduate in like a matter of months. She was home for Hurricane Ida. School was shut down, online classes, but they started up again yesterday. And we had them over for dinner, and I asked them, like, is this still cool? You guys still? And they wouldn't tell me.
They wouldn't tell you.
They wouldn't tell me.
They don't want you to ruin it for him.
Exactly. It was hilarious.
Oh no, Dad's got a YouTube channel. We can't tell him what's cool.
Exactly.
All right, so now that we've gone through our keepers, it's time for me to pick some replacements here. I've got 2 open spots, and it's kind of interesting. Britt and I sort of both went very similar. He's got his conservative pick there, and I've got my conservative pick there, also with a REIT. And then a little bit more aggressive with Chewy, a little bit more aggressive with Qualcomm, really aggressive with Invitae, really aggressive with Greenbox.
Wait, don't I have to pick first? No, you pick first.
I still get to pick first.
How come I don't know these rules yet? Oh my gosh, it's kind of.
I don't want to say it's because you usually get to pick first, but the past couple of months you have gotten to pick first. So like recent history, I totally get it. I remember what happened most recently too.
Yeah.
They say that the memory is the second thing to go.
Who said that? I don't remember that.
Yeah, I forget what the first was too. So anyway, let me go ahead and make my first pick, and I am going to go back to an old tradition, and I'm going to take, I believe it's our newest feature recommendation.
Right. Jason and I write a monthly investment newsletter called The Wealth Advisory. Now, don't worry, this isn't an ad. It's simply to explain why you're not hearing us speak right now. And that's because over 25,000 members pay the very reasonable annual subscription fee for the Wealth Advisory, so they can get our latest insights and advice hot off the digital press. Now, we believe we have an obligation to our loyal readers, so there will be a quiet period during which the latest investment recommendation will not be made public. Should you decide you want to join the Wealth Advisory ranks and get immediate access to these picks, you'll find a link in the video description to a secure order page where you can sign up to become a member. Of course, we invite you to tune in to the Wealth Advisory Top 10 videos for as long as you like, with absolutely no obligation whatsoever, except maybe hit the like button once in a while. All right, so now it's my turn. Is that right? Is that how this works?
It's your turn. Going back to you.
All right. Well, there's a
replacement number one.
There's several things that I am very bullish on at current levels. I mean, I'm looking at and I'm just going to tell you because some of them are probably on your list as well. Lemonade looks very attractive here. Stone Co looks attractive where it is.
Yep.
QuantumScape has been moving lately.
QuantumScape is definitely on my list there.
Yeah,
it's up about 30% in the
I
past
know
week.
it is. It's been cooking. So yeah, I think QuantumScape is going to be my ad. Lemonade. If it's still there, I might grab that one next. Maxar is another one that I wouldn't mind having a piece of.
Maxar is definitely a good one in there
for my 5.
You
I
know,
don't have enough spaces.
Maxar below $30.
It seems like
it's
a no-brainer at this point. It's just like
they're
you buy it
practically paying you to take that stock at that point. You know, I mean, Star is such a great company. It's got so much, future potential ahead of it.
Oh yeah.
It's going to bring back that dividend soon too.
It's so wild that
we're going to get space profits.
With,
it's going to be
with
awesome.
all the stuff that's going on, space tourism and all of that. Maxar is still languishing.
Well, it's because Maxar's not exciting. Maxar's like the real part of space, satellites and stuff. Space tourism is like whatever. Like you're gonna run out of people to pay $250,000 to go see nothing real quick. I promise you. What was the kid that went up with Jeff Bezos was like, yeah, I thought it was going to be really cool and I get to see the Earth and stuff. No, you look out the window, it's just black.
That guy's a spoiled little brat, though. I mean, frankly.
No, it's super cool you got to go into outer space, man. Deal
I don't like that kid at all. I don't like that kid at all.
I feel like anybody who's that close with Jeff Bezos is probably a spoiled brat.
Didn't his dad pay for it? Didn't his dad
I have no idea how he got up there.
Ridiculous
I just know that he said that he was disappointed that he didn't get to see the Earth, and I'm like, wait, if I pay $250,000 to go up with Richard Branson, I don't get to see the Earth? No.
Well, he was on the wrong side of the shuttle. He's looking out into deep space.
It's basically like if the shuttle's this way, you can see the Earth. If the shuttle's this way, you can't. You know?
You know what? I'm glad he didn't see the Earth. Actually,
I am too. Now that you tell me about that.
Right.
But yeah, I think Maxar. Nobody's paying attention to Maxar because Maxar's not exciting. Maxar's not a story. Maxar's not billionaires in space. Maxar's, satellites and profits and dividends and stuff. Maxar's like a serious investment.
Right.
It's not billionaires in
seriously
space.
Undervalued too. I would say.
Seriously undervalued. But it's it's going to turn around. People are going to start paying attention to that.
Are you taking it or what? What are you doing?
It's so tough because I had literally settled on. I shouldn't say settled on. I had decided on QuantumScape, and you just ripped it away from me. Like a babe from its mother's arms.
Yes. This is called winning.
I mean, you know what?
Hopefully.
I think
with any luck,
this one's gonna be okay. Yeah, I'm gonna do this. This one's completely different. Like literally the opposite company from QuantumScape. But I think banks are super cheap.
Oh, okay.
And I think banks are looking really attractive right now. And I think even at where's it at around $43, Bank of America is a good buy. I don't know that it can rip that 30% higher in a week like QuantumScape just did, but I think that it could give us another 10%.
Depends.
And, as rates continue to move up, banks can make more money.
Right.
It's sort of a balancing act, but I think that banks have sort of been ignored. Yeah. I think they're looking cheap, and I think Bank of America is the best one out there.
I mean, all-time highs are like $60. I mean, that's pre-financial crisis, but
we're getting back there.
I know, and inevitably it's getting back there.
And with a solid business and a solid balance sheet, pre-financial crisis shenanigans.
And while they do mortgage lending, their thrust is consumer banking.
Yeah.
So they're not as housing prices rise and probably the market there slows down. It's not going to affect them as much, and rates rising isn't going to affect them as much
no.
as well. They always get lumped in like, oh,
They
rates
do,
rise,
they
it
do,
hurts
and
banks, but
they-
it doesn't hurt Bank of America. I mean,
No.
honestly, it doesn't hurt them at all.
Bank of America actually, it's interesting if you look at the stock. You know, they'll be affected by the announcements, but they're rarely actually affected by the rates themselves.
Right. And Bank of America, you know, if you are like a trader, they almost always sell off on like Fed decisions for one thing, and they almost always sell off after earnings, right? A little pop, and then they'll sell off. You buy those dips, like buy some calls or something like that.
Definitely.
It's a and their calls are always so cheap
They
in
are.
terms of like volatility premium, right? Great trade. I used to trade a lot. I don't know why.
No,
I
I
stopped.
love Bank of America. I've been building a position in my IRA in that one for over a decade now.
Oh yeah.
Yeah.
It's a great place to be. Truly a great place to be. All right, so it's back on me, huh? For my final.
For your final replacements.
Yeah. I'm gonna go aggressive again. I'm gonna leave Hannon Armstrong as my one kind of like conservative play. Kind of like Prologis here, though. I gotta tell you, that's another one that's like just an underappreciated company. You know, the technology that they run for Amazon's warehouses is, I mean, it is amazing stuff. And when Amazon warehouses go all automated, which is coming, Prologis is the one that's going to be driving that. And so their ability to expand, that type of innovation to other companies is probably going to be huge. Amazon's either going to have to continue to pay them a premium to work only for them,
right,
or they're going to have a massive market opportunity. So anyway,
huge.
But I'm gonna go with Lemonade.
Okay.
I think it's too cheap here. $60 roughly.
Yeah, right down there. No, Lemonade's a great stock. Lemonade's a great company. They're
Yeah.
they're disrupting the insurance industry, and like they're doing a good job of it.
Yeah.
I know I've mentioned this before,
Right.
but like when we first recommended Lemonade, somebody was like, "Oh man, Lemonade, I use that." And I was like, "Who talks about who brags about their insurance? Like, this is an awesome company. We gotta recommend this one."
Yeah. But when people find something, product, services, whatever that speak to them, they're going to say something about it. Right.
I mean, hey, like I'm adamant that everybody should be invested in Chewy, but I'm
Right.
also telling people like you should get your pet food from it. It's super convenient. I do, The dog loves it when his Chewy box gets delivered every month.
He knows what
Oh,
it
he
is.
knows it's his.
'Cause it smells like bones and stuff.
Yeah, because it smells like toothy bones and salmon and rice and stuff, and he loves it. So I'm behind Chewy, and I tell everybody you should not only use the service, but you should buy the stock.
And call them and
definitely.
chat with their customer representatives. Apparently, you can do that for an hour, and they don't get off the phone. Yeah, the CEO decided that the call center is not going to be like a profit center. They're not going to include the cost of customer service in their own internal reckonings of overall company expense, right?
I like that.
So if they have to hire more people, they do it. They don't say, "Oh, we can't hire more customer service." If they need it, they're going to do it because their customers are their business. I mean, that's true for every business. Your customers are your business, but a lot of companies don't treat you that way.
No, definitely not.
Like Spirit, you just flew on Spirit.
I just flew back from Spirit Airlines.
They don't think about it like that.
No, they did not treat me like
You're a number.
anything.
And everything they can squeeze out of you, they're going to.
Yep. Every single dime.
And Chewy doesn't have that outlook for their customers. And I mean that's an interesting thing because you're seeing more and more of that. Companies, the ESG stuff, we make fun of it sometimes because the whole virtue signaling thing.
Oh, definitely.
But there's a reality to the customers of your business, and you get lifetime customers, and your business can be sustained.
And
but
this
you
is
have
the
to
S
treat
part.
them right.
And a lot of people
Yeah.
ignore the S part. They only pay attention to the E, the environmental. And so a company can be like, "Oh, we're carbon neutral," but really, they're still a huge polluter. They're just buying carbon credits from a company that's
sure.
not. But that social part, that's something that a lot of people don't pay attention to.
And the governance, really.
You look at companies like Costco. Costco is one of my favorite companies. It's one of my favorite stocks. I love using it as an example. Also because it's got those comparables. It's got like Sam's Club. It's got BJ's. Costco outperforms them. Costco outperforms them because of that kind of thing. Because of their service. Because of the way that they treat their customers.
And their
but also the
employees.
way they treat their employees and the way they treat their suppliers.
They have the
There's
lowest. They have the
stories
lowest.
about Costco. Basically like negotiating with this tire supplier and like hammering him down to like the lowest cost they could possibly get. And then Costco went back and did the math and realized that guy was going to lose money.
Right.
And so they called
Can't
him the
do
next
that.
day and they were like, "Hey man, we want to change the contract." And he's like, "I can't do it for any less,
Can't do it,
guys."
yeah.
And they were like, "No, we want to pay you more." You know, like we want you to be our supplier for a long time, and if we squeeze you that tight, you're going to go out of business.
Right.
You know, and
That's
so
amazing.
and that's the social part of it. That's
Right.
like paying attention to all of the stakeholders,
Right.
not just shareholders, but stakeholders.
Right.
You know,
Everyone
and I love
involved.
companies that do that. Chewy
And-
seems to be a company
And
that does that too.
Costco always pays their employees much more than the market rate, so they have the least employee theft of any company, of any
And
like retailer.
lowest turnover
Right, right.
rates. Yeah, no, they're great. They're
And that
really
employee
great
theft is
company.
a huge issue for retailers.
It is.
And so that's what you do. And speaking of, you got Bank of America. You know what Bank of America's minimum wage is?
What is it?
$25 an hour. You started. Isn't that amazing?
That's
You
more than I made when I started at Morgan Stanley.
Right. You start
crazy.
at Bank of America, and you're going to make a minimum of $25 an hour.
That's
And that's
awesome.
because they know that's how they get good people and how they keep good people. And it's not just like a bribe. It's like
And having good people gets you good customers.
absolutely, and it
know,
makes you a
that's
good
what you want.
business. Right.
Yep.
Right.
I like it.
I do
like
too.
it. We got a little philosophical there.
Sorry.
I like that
It
too,
happens.
though.
It happens on occasion.
So let's do a little recap here. We got all of our keepers and our replacements. I'll run through mine. I am keeping Innovative Industrial Properties, Chewy, and Greenbox. And then my two replacements are going to be Bank of America and Unity.
Unity, not Unity. We have like two.
Right,
Yeah,
exactly.
it's hard. Did you write these down? How do you remember the 5 things that you just said? 'Cause
I
never
usually
can.
write them down, but
Right.
because of that
Smart.
red-eye flight and the nap that I had to take before this, I
Right.
am not writing them down, so I'm just gonna have to try and keep them up here.
Okay. Well, I'm keeping Hannah Armstrong, Qualcomm, and some other one that I can't remember now.
Armstrong, Qualcomm, and Invitae.
Oh, thanks. Right. And I'm adding Lemonade and QuantumScape. So that's aggressive. I mean,
That
that's
is
definitely
very aggressive.
That's we're gonna need some some upside there. But what's interesting is that last year, coming into the end of the year, it was those alternative energy stocks, especially the EV electrical vehicle stocks that really went nutso.
Well, they went crazy for all of, but like basically from November almost to mid-February.
And I think there's a decent chance it happens again, because it's one of the things that individual investors will get excited about. They're great stories, and if you have oil continuing to ramp, you get a good sort of reciprocal story for the renewables. So so QuantumScape could fit into that really well, and Hannah Armstrong. So I'm just saying that.
Nope, I like them all. I think that's a really good. I mean, and if you get like that momentum, going, like those stocks in those 5 stocks will just rip.
Yeah, they will.
I mean, there's no, they
They
get
will.
momentum behind them. It's not a 5% gain. It's like
Right.
15% gain.
I mean, QuantumScape can easily be $40, $50 stock again. I mean, there's no reason that doesn't happen sooner than later.
And they're making really good progress, guys. I know that people have probably been like a little freaked out by the volatility in QuantumScape, but like they're making really good progress. The company is really doing this stuff. Like we're really convinced that they're going to be one of the first ones to market with this, and they've got that guaranteed customer in Volkswagen.
The biggest car maker in the
Yeah,
world, by
and
the way.
so this is sort of how this is how you get those big 1,000% gains. Is that you buy these companies before anybody else believes in them.
Right.
We bought Innovative Industrial Properties at $19 because nobody else believed in them.
Mm-hmm.
But now it's our biggest gain.
That was great. All right. Well done. Okay, well, there you have it. There's our 10 stocks for October. Jason Williams, Britton Ryle, thanks for tuning in. Do you have something to say about a bell and a...
I do.
Say that again?
And if you're watching us on YouTube channel, please subscribe to the channel. Click the bell to get notified of new videos.
Okay.
And like the video, drop us some comments. If you've got any questions you want us to address, please put them in the comment section. I'd love to hear from you.
Yep, we'll answer. All right, take care. Thank you.